Ladies and gentlemen, Greg Michalowski. Today's date is August 25th. It's a Sunday night, beginning of the new trading week, and I'm going to take a look at the Forex week ahead. Technical look at the major currency pairs. Let me remind everybody that trading foreign exchange carries a high level of risk that may not be suitable for all investors. In addition to that, leverage creates additional risk and loss exposure. Should you decide to trade foreign exchange, carefully consider your investment objectives, your experience level, your risk tolerance. You can lose all or part of your risk capital, so be aware and be prepared. Let's start off by taking a look at the euro versus U.S. dollar, and here we have a daily chart. Actually, I'm going to put it on the weekly chart here to start things off. The weekly chart, if you take the 2012 low that occurred in July of 2012 and the high that we saw in May of this year, the 38.2% retracement comes in at the 132.47 level, and last week we flirted around with that level. In fact, we closed, I think, within 5 pips of that 47 level. But today, what are we doing? We're gapping to the downside here. We have gapped up below the low level from last week. That low level came in at the 132.19 level. The high price for today has come in at 132.13 so far, 13.5 so far. So we haven't quite moved our way to at least the low price from last week, and that's keeping the bears in charge. Remember, although there's a gap in the price, whether you look at the weekly chart, whether you look at the daily chart, whether you look at the hourly chart, there is this gap in between where the low came in play and where the high is today. That gap can remain forever, or it can remain for 6 months, a year, 2 months. It's likely to be filled, yes. But for me, folks, what I like to see is the market showing some bullishness. Okay, if the gap is to the downside, if it doesn't show any bullishness, like we moved above this trend line here, that was somewhat bullish at 132.01, and we saw the price move higher, but we couldn't get back up to the 19 level here, which is a low price from Friday's trade. And as you can see, we're back down below this trend line here, which was this channel trend line. So the bears remain in control. The bulls tried to take a little bit control here, but then they forced the market back to the downside, and that was more bearish for the pair in trading here today. So the sellers are still in control for the euro versus U.S. dollar, back below the trend line here, and unless the price can make its move above the 132.19 level, I got to think that the trend remains your friend. The trend to the downside remains your friend. Ultimately, this 132.47 level, the 38.2% retracement of the move up from the July 2012 low to the high that we saw in May, is the level that is the line in the sand for this week's trading. Stay below that level, and the bears remain in control. The buyers remain nervous. Remember, this market's been trending, and the buyers have to prove that they can take the price higher. Okay? So those are my key levels for the euro versus U.S. dollar, not only today, but going on in the week. Let's take a look at the sterling versus U.S. dollar. And I'm going to put it on I'll put it on the daily chart, because on the daily chart, if you look over time here, go back to July of last year, what has the pound versus U.S. dollar done? Trended all the way from 148 to 172 is the round figures that the markets traded to and through. And last week's trading, we saw the price move below the 200-day moving average for the first time since August of 2013. The move below that 200-day moving average is significant. Stay below that level and keep below that level, and the bears remain in control. Move back above it in this week's trading or going forward, and this would be a failure, and the bulls would take back control in the sterling, and traders would look at more of this as a failure. But we've been below that 200-day now moving average now for 1, 2, 3, 4 closes, I guess, and so the bears are starting to take a little bit more control from the pound. Now, some people might say, well, the economy over the UK is doing very well, and indeed it is. However, look at that 148 to 172 level. The U.S. economy is doing equally as well, and probably those two central banks are, maybe moving neck and neck as far as tightening goes. And so the question comes, has a lot been priced in on the pound side versus the dollar side already? And that may be what's dictating the flows more to the downside now is that there's room to correct further in the pound, maybe toward the 38.2% retracement. First stop being 164.80 or 58, which is the low going back to March of 2014. So that would be our first target on the downside if the bears can remain in control. Now let's take a look at what's going on shorter term here in the pound versus US dollar. And if you take a look at the hourly chart, the hourly chart, and we measure and we look at the 100-bar moving average as an example, the blue line in that chart. The market went a little bit above it here on the from the highs from last week. We also went a little bit above old trend line support, which was broken through here. It went above that level, and then the market started to rotate back to the downside. When we saw the price move below that 100-bar moving average here, we started to gain more momentum to the downside on a corrective move from Thursday's trade to the upside. We came back up to where the 200-day moving average is. If I go back to the daily chart and look at the 200-day moving average, you see this peak right here on Thursday. That was right against the 200-day moving average. So what does that tell you? That tells you that the sellers are happy to sell against the 200-day moving average, and that more than anything caused the market to rotate back to the downside. Today we are seeing a gap lower, like in the euro versus US dollar. The low from Friday's trade came in at the 165.60 level, and we haven't been able to move back above that level yet in trading. I'm going to connect these lows right here in a trend line here because it looks like there may be some reason to find some buyers there. Indeed, the low for the day just above that level. I would on the downside, I'd keep an eye on this trend line here connecting on lows. Currently comes in around the 165.24 level. If we move through the lows, look for support against that level on the downside for the pound. If it cannot get above these lows right here around the 165.60 level, and the sellers remain in control for the pound, then we'll look for further downward pressure. If we get above that 65.60 level, we have the potential to move higher in that currencies pair. Remember, it is a stronger. They have a stronger economy, so it can move higher. Just because, okay? Just because it has that potential. All right, let's take a look at the dollar versus yen. This is another currency pair which saw the dollar get stronger against last week. In last week's trading, some of the catalysts that we saw were a break above this trend line here. If you ignore this area right here, the market was in this box right here, where the market was confined for about the last 4 or 5 months in a range, heading down toward the par 70 level up to the 103-ish type of level on the top side. Well, in last week's trading, we broke above this trend line, and we broke above the 103.08 level, which is a 50% of the day's trading range, and also the top of this confined trading range that we had here for the last 4 or 5 months. That's more bullish for the dollar versus yen. You can see the momentum to the upside as we got closer and closer to our next key target up here near the highs going back to the month of April, I guess. The market did find some more willing sellers here. On Friday, we moved a little bit above it. We had a more volatile day on Friday. If I go to the hourly chart, you can see the up and down action here on Friday through Yellen's speech and all the stuff that went on there. And but today we're seeing a little bit of an acceptance of a new highs here, moving above that 104.12 level, that high price going back to April. And as long as the price remains above that level, that would be more bullish here bullish for the dollar versus yen, and could see a increased momentum that could take the price ultimately up toward our high price for the year, which occurred, by the way, on the first day of the trading year. So that's an important target on the top side, and it's well within the realm of possibility that we go up toward that level. Now, on the downside, I want to focus here a little bit on these highs right here. These were highs at the 103.94. We had a high here at 94, another high here at 94, and today we're breaking to the upside, and we're above the 104.12. Now, if the price moves below the 104.12, we could see, or we should see some further momentum to the downside or some selling on the failed move above that level. On Friday, remember, we went above that 104.12 level, and look how fast the market came down. It went back down pretty quickly. So the same dynamics go into play in trading here today. No momentum to the upside, move below the 104.12 level, and then we start to look down toward the 103.94 level, where we had a high here and we had a high here. If we break below that level, then I think the sellers are more in control. The buyers start to feel a need to maybe take some more profit, and we could see a rotation further to the downside. So keep those levels in mind. Those are the levels I'm going to be watching or trading against with the dollar versus yen in trading here today. But until the sellers can prove that they can move below at least that 104.12 level, the buyers and the trend remains to the upside for the dollar versus yen. Same goes true here, very similar to the dollar versus Swiss. We look at this high going back to January. This is a high for the year, and the market gapped above that level in trading here today. It's a runaway or a breakaway gap here above the high for the year at the 91.55 level. Currently trading the dollar versus Swiss at 91.66. A move back below that 55 level is the minimum. That the traders are going to have to move the price below in order to take back some control from the buyers. The buyers remain in control in the dollar versus Swiss. Again, 91.55 is that support level. Other level to be aware of is the 91.33 level. That represents the 38.2% retracement of the move down from the 2013 high price down to the low that we saw in 2014, 91.33. We traded above and below that level in trading last week, and this week again, the gap move to the upside here has reestablished the bullishness here for the dollar versus Swiss to the upside. Let's take a look at the dollar versus Canada. Next, we have the daily chart here, and we're near the high levels for going back to, what is that, May of 2014. Have a bunch of different highs here for the month of August. This high came in at 109.85. We had this high here at 109.85. So might as well just put a horizontal line there at 109.85, right? There we go. So a double top up there near the high levels, above the 50% retracement, 109.48. And trading in between those, 109.85, 109.48. For this week, an easy way to look at it is stay above the 109.48 level, and we'll give the bulls the benefit of the doubt. Move above the 109.86 level. That increases the bullish momentum to the upside, where we would be looking toward the 110.26 level as the next target on the top side. If we move below the 109.48, look for a rotation down toward the 100, toward this 100-hour moving average down on the downside. Off the hourly chart, this is kind of interesting, and something to be aware of this week is how the market held the 100-hour moving average here on a number of different occasions on Friday's trade. Now it was up and down, up and down. We did have some data come out in Canada, which was overall more favorable, but the market ended up finding support against the 100-hour moving average, and so this 100-hour moving average becomes more important going forward as a result. The Aussie versus US dollar here continues on a daily chart trade in below the 100-day moving average. That's going to be key this week. If the Aussie is going to go higher, it needs to get above this 93.41 level. Until then, however, look for sellers continuing against that level. Now on the downside, we have another key support level here against the lows here. In fact, if you connect, just this slope isn't all that great here, But every time the market comes down to that bottom trend line, we find support, including in last week's trading. So that's going to be a level to eye, 92.36. Currently trading at 92.98, and the 100-day moving average currently comes in at the 100-day moving average comes in at 93.41 for that pair. The New Zealand versus U.S. dollar off to a bad start, or a weak start in trading here today, moving to the lowest level going back to March of this year, and also moving below the 38.2% retracement at the 83.94 level. Our high for the day has come in at 83. High for the day comes in at 83.94, so we're staying below that 38.2% retracement level and moved lower off of that that high price. So that's bearish. Keep that 83. Keep this high price at the 94 level, a level to stay below in trading this week. If the price can stay below that level, the bears remain in control. You can see the quick move to the downside here in the in this currency pair. I'm going to put a trend line here to see if that had anything in play here. Not quite, but we got close to the bottom side of the trend line. Keep that level in mind. If we break below that bottom side trend line, that would be more momentum to the downside. But on the first test, in the first hour of trading, we did find support near that level in the New Zealand versus U.S. dollar. All right, that takes a look at the dollar or the major currency pairs against the dollar as we start off the trading week. Obviously, those stories are going to change, but those are the biases that we're seeing so far. The dollar being stronger here. But so the burden of proof is on the dollar sellers to take back control. My name is Greg Michalowski. If you like this video, please like or subscribe to our to the YouTube channel. And if you want further commentary about foreign exchange, make sure you visit Greg Mike FX. You can put in your email address right here, and I'll keep you in the loop. Good fortune with your trading this week. Bye-bye now.